Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 3 best growth stocks to buy right now, and one of them has over 200% upside growth potential. Now, before we dive into the video, I want to make you aware that these are risky singular growth stocks, meaning that you should always make sure to do your own research, and don't forget to have a solid foundation to your portfolio by investing into index funds, mutual funds, and even ETFs such as VTI, SCHD, and QQQM. With that being said, let's dive into today's video. Finding very long-term technology growth stocks can be very difficult for a multitude of investors who are trying to grow their portfolios over time. However, having a buy and hold strategy, which is a strategy that I personally utilize, is very difficult for investors these days because it seems that people want to get rich quick. However, for these stocks, these are going to be slow burners, meaning that we are trying to get them for as cheap as possible, and then we are going to hold on to them for the long term, meaning 5 to 10 years, or even preferably longer than that, so they can really show their true value. We're trying to identify companies which we can buy in their infancy, so once they grow up, they become money-making machines for us. And because everyone's portfolios are different, and you may be using a different strategy than I am, always make sure to consult a financial professional and do your own research on these companies. But with that being said, here are 3 long-term technology growth stocks to buy and hold for the long term despite the current market volatility. The first one we're going to be talking about is a popular stock that I review often on my channel, which is Palantir Technologies, ticker symbol PLTR. This company is a big data and analytics company which focuses on machine learning as well as artificial intelligence, and they have 2 main revenue channels. The first one would be their government clients, and the second one would be their commercial clients. This company has absolutely exploded in their share price over the past year, and currently they are trading at around $15 per share, to where the most bullish analyst, which is also a 5-star analyst named Daniel Ives, believes this company could surge up to $25 over the next 12 months. Considering that the entire stock market is gravitating toward artificial intelligence stocks, Palantir should be towards the top of that list, gaining investor support and increasing their overall bullish sentiment. That's why investors are very bullish on this stock, because not only is it an artificial AI and ML stock to buy, but also they have very strong fundamentals, virtually no debt, a load of cash on their balance sheet, over $3 billion, so they're not at risk of going out of business at all, and it seems that the future of this company is very bright. However, on the opposite side, we have their bearish case, to where some bears are advocating to sell this company, because Palantir has been in existence for around 20 years, and they went around 19 of those 20 years without turning a profit. And many bearish investors didn't like how the CEO of the company uses stock-based compensation to pay their engineers. However, both of these bearish arguments have been answered. For instance, Palantir Technologies is now a profitable company, to where they have had multiple quarters being profitable, and they are anticipated to close out the entire year as a profitable company. And from that point forward, they are just going to continuously become even more profitable. So that bearish argument has been absolutely destroyed, and as far as their stock-based compensation goes, they are doing a lot better in that regard, and this higher stock-based compensation allows them to attract very good engineers from other companies. So essentially, Palantir is using stock-based compensation to attract engineers and high-performing employees from other larger companies. Palantir is stealing that talent from those companies due to their higher pay and stock-based compensation, so they can get those engineers in Palantir Technologies to create even better AI and machine learning products. Since these bearish arguments were answered, the bears and the naysayers and the critics had to scramble for another reason to hate on Palantir Technologies, to where they came up with the strategy to say that Palantir is too heavily reliant on their government contracts. So Palantir naturally focused on diversifying their overall revenue streams from their commercial clients, to where their commercial clients eventually will outpace the revenue that they are gaining from their government contracts, which is just going to further fuel their overall profitability. Therefore, that bearish argument has been absolutely demolished as well. Because Palantir Technologies is answering all of these very bearish arguments, the share price of the PLTR stock surged by around 124% year to date, even though recently it's down around 16%. In the short term, I do think the company could trend lower, but this would just allow long-term investors to get a better buying opportunity below $15, which is their current share price. Honestly, if you could snag this company for around $11 or lower, you are in a pretty good buy and hold scenario if you want to keep this company for the the long term. However, there is one other problem with Palantir Technologies that you need to be aware of, and that is their very high premium. This means that Palantir is relatively overpriced compared to their competitors, but if we discount that premium according to their overall growth rate, which recently was around a 16% CAGR in regards to their revenue, their premium accounting ratios are much more digestible, meaning that as long as you buy and hold this company, they will grow into their overall valuation, especially considering that in the next year, they're anticipated to grow their revenues at a 19% CAGR, which is far better than that 16% that we just talked about. So it really just depends on how long you are willing to hold this company for them to grow into their overall valuation, and then once they grow into their valuation, the sky's the limit from that point onward. But again, the good parts about this company is that they have virtually no debt, they're not at risk of going out of business even if we enter into a recession or the stock market crashes. The bear arguments essentially all have been answered, and the only problem that is hanging over investors' heads right now is their premium, which they will grow into. With that being said, Palantir Technologies looks like a fantastic long-term investment for investors who are willing to wait 5 to 10 years. But as we said in the beginning, even if you just want to hold this company for the next year, a very prominent analyst believes this company could surge up to $25 in the short term. So if they can have that much growth in the short term, just think about the long-term prospects of this overall company. But I leave that decision to you, and always make sure to do your own research. Up next, we have another fan favorite, which is Sofi Technologies, ticker symbol SOFI, which is currently trading for around $8 per share. Sofi Technologies is a fintech company or a financial technology company which essentially operates as a digital bank. Right now, the most bullish price target on the company goes as high as $16 per share, so there is around 100% upside for this company, meaning that you could literally double your money for this stock over the next 12 months. I like Sofi Technologies because I think their business model works very well, and it's a proven business model, which is their flywheel business model. The company's business model essentially targets young high earners who are not being well served by existing brick and mortar financial institutions. They got their start over in the student loan market, and since student loans are returning thanks to the ending of the student loan moratorium, there's going to be a strong growth opportunity and an opportunity for student loan borrowers to refinance their existing student loans with Sofi Technologies, thus increasing the overall demand for Sofi's overall products and services, which will increase their revenue and add to their overall strive toward profitability. Sofi stock is up nearly 75% year to date, even though they have dropped around 14% recently. Just like with Palantir Technologies, I think this company could trend a little further downwards before they find a bottom and start to appreciate in price. But if you are a long-term investor, that's exactly what you want to see. You want to see this company trend down so you get a better buying opportunity and a better opportunity to either lower your average cost basis or to get this company as cheap as possible so you can hold it over the long term, which will increase your overall profits in the future. Speaking of profits, Sofi Technologies right now is not a profitable company. However, professionals, analysts, experts, and their CEO believes this company will achieve profitability by the fourth quarter of 2023, which will bolster Sofi's overall share price and lead to long-term growth from then onwards. Their accounting ratios are also very decent compared to their overall competition, and with their amazing revenue growth rate of around 30%, their overall accounting ratios are exactly in line with that overall growth rate. So I'm excited about the future of Sofi Technologies and how it could increase by 100% and potentially 200% in the year after. So I can't wait to see what this company makes of themselves in the future. Last but not least, let's quickly talk about Sprout Social, ticker symbol SPT, which trades for $50 per share. However, the most bullish analyst believes this company could surge up to $75. Essentially, Sprout Social is a company that other organizations use to outsource their social media. In a nutshell, Sprout Social will operate another company's social media, which will act as a sort of marketing for that company. Sprout Social is a software company with a web-based social media management platform, and the company went public towards the end of 2019, and many companies are very happy with outsourcing their social media because if they don't, it's just another thing that they have to keep track of and hire for. So just like how companies outsource marketing and advertising, they are also outsourcing social media management to companies like Sprout Social. As of right now, Sprout Social has around 30,000 customers worldwide, and it seems that the future growth potential of this company is very good, considering that more and more organizations are trying to create a social media presence for themselves. The great part about this company is that they are growing their revenues very quickly, and you can see for yourself in the company's earnings that this is the case. However, the problem or drawback that I see with this company is their profitability issue. The company's losses are expanding even as their revenue is growing, and that is a very toxic combination. However, many investors believe in the future they will be able to fix this problem. And considering that they recently acquired Tagger Media for around $140 million, this should expand their overall influence and identify more companies, more influencers, and more organizations who need their social media platforms managed. Currently, the SPT stock is down around 17% in 2023. However, patient investors should look further into this company to see if it's a good buying opportunity. For me personally, I will not be investing into SPT stock because I would much rather have them get on a growth trajectory towards profitability instead of me just guessing that they will become profitable in the future. I really want to see that forecast of them predicting when they will achieve profitability, which was the case when I invested into Palantir Technologies and Sofi Technologies. Now, even though we've covered all three of these stocks, you need to remember to always have a diversified portfolio, have a strong foundation to that portfolio through mutual fund index funds or ETFs, and also remember to not overexpose yourself unnecessarily to any singular risky growth company. For me, as a rule of thumb, I don't invest more than a 5% initial portfolio allocation to any singular risky growth company because that adds unnecessary risk to my portfolio. But I would love to hear your thoughts on Palantir Technologies, Sofi Technologies, and Sprout Social. Don't forget to go and annihilate that like button, subscribe if you are new. Don't forget to become a member of this channel if you want to support me personally for as little as 99 cents. But if not, don't worry. By subscribing, you're going to get this content for absolutely free. And with all of that being said, I will see you in the next YT video.